Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Ethereum, and we're going to be providing a market update. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, we talked a bit about Ethereum over the last several months. Obviously, we know we are going into the merge theoretically in September, although things could always change for all we know. But one of the things I wanted to do is sort of touch base again, see where we currently are, talk about obviously the downside risk. We talk about that quite a bit on this channel, and then just take it from there. So, one of the main things we watch here in these bear markets is it's the bull market support band in a bull market, but you might as well think about it as the bear market resistance band in a bear market. And this is the level that it's important to watch in bear markets because we can easily get rejected off of it. Okay, we got rejected off of it back over here in March. You might say, well, we technically went above it. Remember, we talk about we want to go above it and then we want to see follow through on it. If you don't see follow through, it doesn't really mean anything. You can come right back down the following week and we sort of find ourselves in the same boat we were in before. So the bull market support band for ETH is now ranging from 1906 to 1923. After this 128% rally, you can see we've now had a fairly steep rejection off of it to the tune of approximately 16% in a relatively short period of time. Now, you guys know I've been fairly, let's just say, not very optimistic about the crypto markets over the last 6, 7, 8 months or so. It seems like we're sort of playing out what's played out in the past. But going into the merge, obviously there has been quite a bit of hype for Ethereum, as the Ethereum Bitcoin valuation has shot up quite a bit. And I've said before, back earlier this year, I sort of looked at this and thought it was Wyckoff distribution type pattern, and really anticipated this move down. This move back up kind of caught me off guard here. So I still want us to just sort of take a pragmatic look at the market here, talk about sort of both sides of the equation. Now, one thing to consider with ETH USD is, this is a fairly substantial pump. And I think the big question is is it a pump off the bottom, or is it just a bear market rally? Now, remember, this was about 128, 130% pump or so. We did experience a very similar pump in the 2018 bear market, although it came a lot earlier. You can see it was over 120% or so, 125% pump for Ether USD, and it got rejected at the same place. In fact, right? I mean, it got rejected over here at the bear market resistance band, and we're looking at potentially a second rejection after getting one previously in March. So these things it's very important to look at because we know that the market can play out in similar ways. I think I think the market is certainly a lot more mature than it was back in 2018, and I don't think Ethereum is going to correct nearly as much as it did back then. But it doesn't mean that there can't be more fear before we actually confidently go on a future bull run. Remember, the Fed still hasn't pivoted. Inflation's still high. The money printers aren't on to the same extent they were on last year. So remember, we are sort of fighting the Fed at this point. And I know a lot of markets are hoping that the Fed will pivot, but that they clearly have not done so yet, even though they have been. Perhaps some of their more recent language was considered to be a bit more dovish. So, I'm as I said in the last video, like I do think that this resistance band is an important level to watch. Looks like a pretty clear rejection to me. And so I do think, we got to keep an eye on this over the next couple of weeks, because I mean, if we just continue to, to come back down, then I mean, we become in very danger of putting in just another lower low and sort of then having to try again. Now, a lot of people I think are somewhat skeptical of the idea of Ethereum going back down to test some of these prior levels that we sort of just blasted through. But remember, this market moves really quickly. I mean, we moved from like $3,500, $3,600 down to less than $900 in the span of 2 to 3 months, right? And then in the span of another 2 months, we pumped from 900 all the way up to $2,000. So this market can move relatively quickly, and what seems crazy today might not seem so crazy tomorrow. So that is something I think that's worthwhile to keep in mind. Now, this 20-week SMA again is decreasing right now, and it'll likely be decreasing for a while as long as we continue to just get rejected by it. Now, some other things I think that are worth looking at with regards to ETH is the regression band. Okay, now I've talked about this before. We'll probably continue to talk about it in the future, but the whole idea is that Ethereum, the returns in terms of sort of like the boring non-bubble phases of the market could be best modeled with logarithmic regression, right? Like the idea that you pump and then you come back down to this level to ultimately pump out of it again. Out of the bull market, or sorry, out of the regression band, the bull market is born, but into the regression band is something that usually happens back in bear markets. So maybe a more concise way to say it is out of the logarithmic regression band is born the bull market, but in the bear market, so we shall return. Now, currently, that ranges actually all the way up to, it ranges from 441 up to 916. What's interesting is we've already gone to a price lower than where the regression band is now. If you zoom in, we didn't even quite make it there. But if we were to hit that price today, it would actually correspond to the regression band. There's no guarantees we're going to make it there. I mean, I would argue that eventually we'll make it there, but it could be that perhaps that, the regression band ultimately comes to us. I mean, to some degree, if the price were to, if the price were to go down, we could obviously get there quicker. If we were to just sort of go sideways for a while, we could easily hit the regression band, within maybe 18 months or so. So that's also something to consider as a potential alternative way to ultimately get there, if in fact it is in the cards for this bear market. Now, the other thing that I think is worth looking at is the Ether Bitcoin valuation, because again, this is one of those things that, it looked pretty clear to me like it was Wyckoff distribution. We came down, we sort of pumped back up, but it's interesting because, Bitcoin also did something that's not that dissimilar, right? Like if we go look at the Bitcoin chart, let me switch this over to the daily time frame. Remember, Bitcoin also had sort of this like Wyckoff distribution pattern up here. And then, it came back down. And then just when we all thought, just when we all thought that it might take a lot longer to go back up, we just sort of saw this pump coming out of July. I mean, we said 3 to 6 months to see new all-time highs, and that's more or less how long it took. But then, rather than continuing on with those new all-time highs, we sort of just saw a secondary distribution phase up here, and then we eventually continued the move down. So I do think, the question becomes like, is this sort of just a similar type move where Ethereum has this long distribution phase, and then we just get one more pump up to sort of mark a sort of like a major fake out like we got with Bitcoin USD in 2021, and then it rolls over and then comes back down to complete the pattern that it was previously forming. I don't really know. This is certainly, this move caught me off guard, so it's something to consider at least. Obviously, the more bullish way to look at this would be to say, well, if the merge goes off without a hitch and all the FUD is just unnecessary, unsubstantiated, whatever, then maybe you could draw correlations to this type of a move, right? Where you put in like a high, a lower high, a lower high, and then you sort of have like this V-shaped recovery out, right? You have a high, a lower high, and then potentially you have like a V-shaped recovery out. I wouldn't mind believing this because this is what I used to believe would happen, and I still wouldn't necessarily be that surprised if it happened because, I am very bullish on Ethereum long term. I struggle to consider this I struggle to consider this as the most likely outcome when we're still relatively in a risk-off environment, right? Like it doesn't really seem like we're back to being risk on yet, especially with things like the dollar pumping back up. The dollar's back to 108 now. So, we'll see how things sort of transpire as we go into the merge, which is again theoretically just a few weeks away. Um, and another thing to consider too is if you actually look at the Ethereum dominance, I think there's some things to be learned here because we've sort of moved right back up. I mean, we also had sort of a fake out in 2018 as well, where the dominance came down to 15% and then it pumped back up to 20. This time it came down to 14%. If you ignore the wick and you just sort of look at here, it came down to about 15% or so, and then it pumped up to around 21. So I don't say these things necessarily to scare anyone or anything like that. It's just lessons I've learned the hard way in the past. So I mean, just keep in mind that it is a possibility that it could play out like that, especially if things don't really go according to plan, or if there's unnecessary, or if there's like say regulation FUD, or if there's anything related to the censorship stuff on Ethereum or the Ethereum being censored. Um, I do wonder though in the end if this Ethereum Bitcoin valuation will make it, I mean, to as low as I originally thought. Okay, so I know that when I sort of went into this, I was thinking that this bull market would last quite a long period of time. This is what I thought back in 2019, and I have the first video on my channel is like right here, and it's called like Ethereum's valuation against Bitcoin, timing the long-term momentum shift. And I was very bullish on it even through this phase here, and then right here I started to get pretty bearish. So I didn't even trade any ETH to Bitcoin at this top, right? Not in December, but here I started to get pretty bearish on it. We sort of find ourselves at a very similar valuation, several months later. So if this comes back down to this trend line, it would probably come back down to it at around 0.06 or so. You can see it sort of held as support at 0.05, it held as support at 0.03 and 0.025 and 0.02 and so on and so forth, all the way down to like 0.017. So it has continued to hold support for quite a long period of time. If it holds support again, going into the end of the year or something, then I might have to reconsider my thesis on it in terms of how long it will take. I mean, I do think the Ethereum Bitcoin valuation can reach zero point 0.1. I just don't really think it'll get there like this month or next month. But again, you never really know exactly how these things are going to play out. So we'll see what happens here with the Ether Bitcoin valuation. Obviously, it's taken a pretty big hit today or over the last couple of days. It's now down to 0.0771. But in the grand scheme of things, it's still a relatively elevated level, considering that we haven't even really retraced half of the move up that we saw last week, right? So some perspective, I think, is always needed in this market. But I do, just trying to provide a general pragmatic view of the Ethereum valuation against Bitcoin and against the US dollar. And against the US dollar, I still do think that it's worthwhile to keep an eye on that 20-week estimate. If we do get, another pump going into the actual merge, again, theoretically next month, I would be looking, and we break through the 20-week, I'd be looking at the 200-day, which is currently setting at around 22.31. This is where we got rejected from back in March/April. Okay, so it's a key level to watch in bear markets. We know we can get rejected from that level. It's already happened once, right? It's already happened once during this bear market. It certainly could happen again. But anyways, I hope you guys enjoyed the content. Make sure you subscribe, give the video a thumbs up. I'll see you guys next time.